now our next guests have different takes on the software space. Baird maintaining an outperform rating, but lowering their price target on Zoom, citing lower free cash flow ahead, while our second guest believes productivity stocks like Zoom will benefit from cost cutting, along with names like Salesforce and Atlassian. Joining us now, Baird Senior Research Analyst Will Power and Moatti Capital founding managing partner SC Moatti. Will, start with you. I mean, I'm curious about what Zoom 3.0 perhaps might look like at this point. Things relatively stable, one might argue, but not on that rocket ship trajectory that we saw during the pandemic. What do you like about what you see here, and what are your major concerns?
Yeah, John, great questions. Thanks for having me, and good morning, and happy Thanksgiving later this week. Look, I mean, needless to say, it wasn't a stellar outlook yesterday from Zoom. The quarter actually was okay, but I think there were two things that have contributed to the weakness today. There were some leading indicators as it pertains to growth for next year that raised concerns, and then B, much higher stock-based compensation, which, when things aren't going quite as well, gets a greater, focus from investors. And so I think those are really contributing to the weakness. But look, longer term, for us, this is all about, the platform leadership and added capabilities around Zoom Phone, Contact Center, other items they introduced recently at Zoomtopia, their big customer event, coupled with what continues to be strong cash flow. But look, near term, there's no question they continue to, face some of the pandemic, hangover elements.
SC, is your bet more on the best of breed players like a Zoom, like an Atlassian in this environment where so many have to figure out who's going to win the next generation of collaboration? Or is it more on the platforms like Microsoft, like Salesforce? Where's the biggest opportunity now?
Yes, my personal thesis for investing is that the best product wins. So at the beginning of the pandemic, Zoom was a clear winner. Since then, tools like Microsoft and Cisco have made great strides to improve their products. So the bets are off. But the truth is that if you're looking to build a portfolio that's going to outperform in the long term, you want to look for companies that are helping businesses reduce costs, boost productivity. And my bet is we're going to see a lot of these SaaS companies realign their messaging in order to support that, cost-cutting, ROI model, productivity boost, so that they can turn the corner and get their revenue back up.
Hey, Will, I'm not sure Zoom is considered a canary in terms of the overall space, but there has been some discussion today about the fact that CrowdStrike's coming up, Snow, and some other names into it, and that they better be good. Otherwise, software as a whole might come under fresh pressure. You agree?
Yeah, no, I think that's right. I mean, look, Zoom fits within the unified communication space as opposed to enterprise software broadly, but, they're still subject to some of the same key trends, and they're seeing lengthening sales cycles in some cases. Per the previous comments, though, they're a platform that actually helps lower total cost of ownership, right? And so there are some places where, they could, in fact, benefit, but clearly, as we indicated earlier, still facing kind of that so-called pandemic hangover and slowing growth. Look, as it pertains to upcoming names, yeah, we still have high expectations for Snowflake in particular. I think a lot of the trends around cloud data, remain positive, and despite slowing growth from some of the hyperscalers like Microsoft Azure, AWS, et cetera, early in the earnings reporting cycle, many of the data cloud names have continued to post, very encouraging trends. And so I think some of those cloud data leaders are still well positioned as we head into the next couple of weeks.
SC, as we continue to see valuations come down, how are you thinking about consolidation in the enterprise software space? There's a bit from Zoom's earnings, 209,000 enterprise customers. That was actually up from the previous quarter. That could be attractive to a bigger tech company. And you saw Stuart Butterfield sell Slack to Salesforce. Do you think that could be in the cards for Eric Yuan?
I think it's a possibility. I'm not sure the company is interested in doing something like this. But what we're seeing is post-pandemic, a new wave of innovation where companies like Salesforce and Adobe ride sort of the cloud innovation wave that started about 20 years ago. Post-pandemic, we're seeing companies take advantage of AI, of analytics. So the winners of tomorrow over the long term, we think are more like Atlassian, Amplitude, that type of new emerging platform. And my take is Zoom is probably one of the newer platforms.
Well, what about you? How are you thinking about consolidation, and where do you think it would come from? Is it other tech players, or would it be the private equity funds that are looking more at more take-private deals?
Yeah,
it's true.
I was going to say that's a great question.
To Will.
Yeah, it's look. I mean, I think as you look at Zoom and the unified communication space within broader software, we haven't seen private equity interest yet. That doesn't mean it couldn't happen. I think there are a number of interesting strategic fits. I mean, there are opportunities, whether, it could be Salesforce, or it could be an Oracle, names that have kind of dabbled in communication software, and where some of the names like Zoom, I think probably could be an interesting fit. Investors have also focused on whether Zoom itself could be a buyer of assets. Of course, it made a run of 5.9 at one point. It has a nice balance sheet with over $5 billion of cash and generates good free cash flow. My suspicion is it would be more of a tuck-in variety as opposed to something bigger. But I do think longer term, Zoom could be an interesting fit with a bigger enterprise software entity.
All right. Will, SC, thank you.